Evening, ladies and gents. Njabulo and Nsibande here. Simon is only going to be joining us next week. Quick one. We do apologize for last week. We had the series on the on Zoom webinar had reached its end, but we had Simon had forgotten to renew the link. But now we're back as per norm. These will continue every Wednesday, 5:30 as usual. So a quick one, just a quick reminder that you can lose more than what you start with if you aren't careful. Let's get back straight into some charts. So I got stopped on a couple of trades. Let's do that. First, it was the Citrix 40. Let me bring back my. So I got stopped out yesterday. If you subscribe to the mailing list, you probably got in the email yesterday. We had a stop loss triggered yesterday, and I exited just at close on Citrix 40 as it closed below the 15-day exponential moving average. So we haven't had a trigger as yet. The lazy system will be quite painful during consolidation periods, which is the case at the moment. But at some point it will start to break higher, and that 63 rand resistance level will cease to be a resistance level, and we should be off to the races, unless of course the bull market has ended, but probably not. Another trade that I got stopped out of is Nsibande, which was surprising because they had a pretty decent trading update. I think it was on Monday. So it came bitterly close from stopping me, and only stopped me on this candle, and this is where my stop was. So far, okay, I suppose. And the plan for the trade, I'm gonna wait for it to break above that 72 rand. That's for now, but could bring that level a little bit closer. We'll see as the days go, how the stock trades. Another one I got stopped on is Quilter. I got stopped around that 31 rand and some change level. I got around 31.45. Yeah, somewhere there. This is where I got stopped. That's okay. Breaking it broke this move was making a lower low, and I don't want to be in stocks that makes a lower low, so I got stopped there. Also got stopped on SAPI. When it broke through the ascending triangle, invalidating the triangle, now staying below the 50-day exponential moving average. But looking like it's found some support around that 43 rand level, but we shall wait and see. In the meantime, I don't necessarily have to lose another cent to find out if the stock is still trending higher. If I had not taken that loss, it would have been now a slightly bigger loss. And similar on Monday, I got stopped with a modest loss as it broke through that uptrend. Looks like it's starting to recover again. I'm gonna look for some entries again on Monday. Also got stopped on APSA. I got stopped on those candles there as it took out these lows there. So far, so good. Now I'm waiting for that 127 or 128 level. Want to get a close through that one, I'll then jump back into the stock. Also got stopped on Telkom. You entered on the break there. Where was it? On the break there, got stopped immediately, and now once it trades breaks back above this 39 rand level, I'll jump back into the trade with a stop just below those lows there, closer to the 200-day exponential moving average. Another one that got stopped on was Bitcop. And it looks like a head and shoulders pattern there. Right shoulder head and left shoulder head and the right shoulder, but we'll see. And it looks like it wanted to break through that neckline there, but held above it. But we'll see. On Bitcop, I'm still waiting for the 296.40 level. Also got stopped on Woolies as a on that sell off there. Waiting for a close above that 50 Rand 90 level for me to jump back into this trade. On Impala, I got stopped for a nice profit, just under 6% return on this trade. I got stopped on that sell off there. And it looked like it did try to come back to test that and found some resistance at that 270 level. And so far, looking to trend downwards. And again, this is the importance of respecting your stops because a stock can just as easily continue to trend lower. Another stock I got stopped in was Northern, and similarly, on a modest profit. And PGMs had a tough week last week. There was a huge sell-off there on the PGMs, but I got stopped with a modest profit of about 4% on Northern Plat. And I think that's I also got stopped on Fushimi, but I actually then jumped back into this trade, and so far it looks like I'm going to be stopped again. The stock closed below the 50-day exponential moving average, but hasn't properly violated the support level here. We'll see over the next few days how that pans out. So new trades, I added to Distal. Now this trade is sitting very nice in profit. If I jump back to the weekly chart, and folks, feel free to pop some questions in the Q&A box and the chat box as I'm going. But if they're not time sensitive, I'll see them in the end. But if they're specific to the chart that I'm looking at, I'll just answer them immediately. So, Distal today broke through that 138 resistance level on this is a weekly chart resistance level. Nice break with a decent bit of volume on the stock. So I entered just before the close, just before just before the close today, trailed my stop to that 131 level. And so this trade is essentially in profit. This is a risk-free trade. I'm sitting at about 9% profit at the minute, looking quite decent. So if I jump back to the weekly chart, so now I'm looking for a close through that 146.85 level, which was a resistance, and then I'll add to the position. I'll keep on pyramiding into this trade for as long as we're still breaking higher. And so far, so good on Distal. This is actually one of my proudest trades that I've taken. So since we started this series, I got in very back. This is the low where I got pretty much almost caught the low on Distal, and it has since doubled. So I think today was the doubling of the stock. Moved about 100%, just under 100%, about 98% since I bought it. Looking quite decent. I'm not proud because it made a decent profit. I'm proud of this trade because I sat with it, despite the temptations to exit that may come to exit a position. So I also added on Discam. Nice breakthrough today. Looking for another breakthrough on the above that 2650 level, in which case I'll trail my stop probably to below that red candle there around that 2470 level, looking fairly decent. The stop is slightly above the earlier trade that I took. So yeah, so far so good. 1% is about at risk on the trade. Similarly on clicks, a nice breakout through that 255 level, which is on trail my stop to that 245.50 around that 50-day exponential moving average. I added to the position. First entered on that break through that level there, and now I've added to the position accordingly and trail my stop behind me. So I want a close through first through the 266 level, in which case I'll add to the position. And again, if we get a close through the 277 level, I'll again add to the position. And as you can see, that 277 level provides a potential giant round bottom there, but we'll see as over the next few days. A trade I entered yesterday, I also added on Glencore yesterday. Yesterday. So the break was on Monday, closing through that 64 and 50 level. Fortunately for me, kept lower in the morning with that doji, kept lower and stayed flat. Yesterday, but today, kept higher and kept on moving. Trail my stop to that 49 level on that stock. And if I zoom out, perhaps on a weekly chart, you can see we've been making nice higher lows on the stock. Added to that, a golden with a golden cross as the 50-week exponential moving average crossing the 200-week exponential moving average. Looking fairly decent. I'm expecting a bit of reaction around that 68 Rand level, around that level there, in coming back to test that 64.50 level. And above it, I'll add to the position and trail my stop behind me accordingly. Next is Nedbank. So Nedbank broke out there. Was happy with that. So far, look coming back within the box. If we got to close through that 152.60 level, I'll add to the position and trail my stop just below that that swing low, small swing low there on the stock. But once we break through that 152 level, we would have invalidated that doji there, or that morning star. Got the term, but once we get through that 152.60 level, we'll have invalidated this candle, and then as you can see, we're making a higher lows, which is what we're looking for on a stock that's trending higher. I think other than that, no more new trades. Just go through the rest of the trades that I have. So African Rainbow, looking fairly distance, has been sideways for a while. Broke out of that sideways range. It broke out on Monday, but with that doji there, but it came back. It kept up and stayed in to test that 50-day exponential moving average. And today, looking fairly decent, break through that range and close green. Today closed above the 287 level. So yesterday, when on this close, I trailed my stop because my stop was around the 263 level. I pulled it a little bit closer on that close there, because a close higher, whether the candle is red or green is neither here nor there. The fact that it closed higher, and this was the high close for quite some time. As you can see, the last time it closed, that high was there back in March. So that was a fairly significant close higher, though the candle was red, and it was like a bearish hammer candle. Was still comfortable to trail my stop and pull it closer. But once we invalidated by a close higher than this open here, once you get a close up above that 291 level, I'll pull my stop to that just below the doji there behind me, which will reduce my risks to about 1.2%. And then once we get it close through the 303 level, I'll then, once we get through a close above the 303 level, I'll add to the position because, as I'll trail my stop, the risk will be less than a percent. I don't know if I mentioned this, but previously I used to trade in the direction of the weekly trend, and I defined that with the 30-week exponential moving average being above the 60-week exponential moving average. I've since changed that. The definition of trend now for me is now changed to, I want the 50-day exponential moving average to be above the 200-day exponential moving average, and that's because the previous approach made me miss too much of that bit in the middle, what I was looking for, and the 200-day being above the 50-day, 50-day being above the 200-day exponential moving average kind of solves that, but comes with another problem of, giving me too many trades. And I've handled that by reducing the risk I take on each trade. So instead of a 2% risk, I'll now be taking a 1% risk on each trade. So I thought I should get that through. So next is Aspen. Aspen looking very, very nice. My stop is below that swing low there. So I added as we close above there, as we close above that giant candle there, I added to the position and trailed my stop accordingly. So now I'm waiting for, if we jump back to the weekly chart, if we can get through that level there, that close, that 168 level. If we can get through that level and get through that 200-week exponential moving average, I will add to the position and trail my stop accordingly behind me. Njabulo looking fairly decent. Nice strong breakthrough there, but came back. This is quite a bullish candle. This doji candle is quite bullish. If we get a close back above that 101 level, I'll trail my stop to that 94 rand and some change level. And if my risk is less than 1%, if my risk is less than 1%, I'll add to the position. So Graham is asking what EMAs are used to define a trend now. So I'm using the 50-day exponential moving average and the 200-day exponential moving average relative to each other. So I want the 50-day exponential moving average, which is this pinkish line, to be above the 200-day exponential moving average, which is about this, orange, olivish line. So I want 50 to be above the 60, and I want the price to be above the 200-day exponential moving average. I don't mind if it's below the 50-day exponential moving average, but as long as it's above the 200-day exponential moving average, because at times the stock will come back like it did here to test the 200-day exponential moving average. And if I get a nice entry, whether it's a reversal candle like a doji or whatever the case may be, I'll then take the position. Granted, if I don't already have a position with an entry higher, so I'll take but the 200-day exponential moving average, I still needed behind me. So BHP, we had a good breakout there, a nice close higher, which we hadn't closed that high since that candle there back in Jan. So that close higher there was quite significant for me. So I added to the position and trailed my stop to just below those lows there. And so far looking quite lacquer. with a close through that 475.30 level, I'll add to the position and trail it ever so slightly. But I'll look for, price action dependent. I'll look for a better place to stop at the minute. Not very, very much. Yeah, I'm going to get into Pepco in just a sec, not to worry much about Pepco. So next, Capitec. Capitec looking fairly good. So I first entered Capitec on the break above there. It was a giant cap and handle pattern there. I entered Capitec on the break there, and my stop initially was below that handle there. Initially, this trade was, I made an error on this trade by risking slightly too much. Initial risk on the trade was 5%, but I've since managed that by trailing my stop as the trade moves against me. But acknowledging the fact that it could have went sideways and I would have lost 5% on the trade. But so far looking quite good. So now looks like it found some. I should do this. Looks like the stock has found some resistance around that 260 odd level. Now, once we get it close through that level, I'll add to the position and move my stop to around break even on that last trade. And I'll be quite significantly in profit, but I'll just add to the position and trail my stop to just below, perhaps just below that doji there on Capitec. So already looked at clicks. Coronation, nice cup and handle formation on Coronation. Waiting for the breakthrough, that 56 rand. It looked like it was breaking through on Friday, but didn't. And it tried again on Monday, but didn't. But so far, holding that support level there of the handle, that 54 rand level, waiting for a breakthrough, that 56 rand level, and then I'll trail my stop to 53 and add to the position as well. So Coronation looking fairly, fairly decent. We did touch on Discam. Looking at Discovery. Discovery finally broke through that symmetrical triangle pattern there. I was already on the trade back here. So now I'm waiting for the breakthrough and close above that 145 rand level. And then I'll add to the position and show my stop to around that, 137 level, just below that 50-day exponential moving average. Not in a hurry to do that at the minute, but looking good. Today we had a nice bullish engulfing candle as it was testing that resistance level of the symmetrical triangle pattern. What was resistance looks like it's now support, which is what we're looking for on a stock once it breaks a resistance level. We did touch on Distill, Exaro. So Rich is asking, does the 50-week, 50 and 200-week exponential moving average show slower confirmation than the 30 and 60? So the 30 over 60-week exponential moving average was taking too much time to turn, because those two lines can be apart, can be further apart from each other, and in a weekly chart that could take weeks and months on end before they can uncross, and in which case a stock would have run 30-40% within that time. So that's why I've reduced it to 50-day exponential moving average to 200-day exponential moving average, giving more trades. The new approach that I took gives me more trades, but I manage that by reducing my risk per trade on the trade. It was a little bit slower with the weekly chart. Okay, so Discam. So Enrich has wanted to compare the two with regards to Discam. So I'll bring back the 30-week exponential, the 30-day exponential moving average, and 30. So as you can see, the 30-week exponential moving average on Discam only crossed there. right? Only crossed, somewhere in April. That's the only time that it only crossed there. However, if I jump back to the daily chart and we keep that there, look at how much the stock had run. And if I bring back the 200-day exponential moving average, that cross actually happened. That's where the cross happened. So it happened 4 months earlier than so it would have been 4 months earlier on this trade. And because also on Distal, I ignored that breakout there because of the 30-week 30-week versus the 60-week exponential moving average. And this was a very, very nice trade. Golden cross with a valid breakout. I would have gotten in this trade much, much lower and much, much earlier. So, giving up too much of that bet in the middle. That's why I've since gravitated towards just using the 30-day exponential moving average. 50-day exponential moving average over the 200-day exponential moving average. Where were we? Exaro. So Exaro paid a chunky dividend, which was the cause of that gap there. I think it was about 18 Rand. So it was like 15 Rand dividend and about 5 Rand and some change special dividend, which caused that massive gap. And because the dividend was so giant, I didn't know how to handle it from a risk management perspective and from a stop loss management perspective. I dragged my stop to, and I was going away. It was my birthday weekend. So I didn't want to be in a position where something wrong would happen and I wouldn't be able to manage the trade. So I dragged my stop to well through away traffic to below that 200-day exponential moving average, to be below that low there. And I felt that was safe, and seemingly it was safe. And when the stock started, to close that gap, when he closed above that level there, I chose my stop. When it broke through there, I chose my stop to just below those lows there. And now I'm looking for a close through that level. And through that, 166 level, and the close above that 50-day exponential moving average. And then again, I'll trail my stop to that level there. As you can see, I received quite a chunky dividend, around 134, which is about just about 2% of just about 2% of my account on just dividends. So I can subtract this this dividend from this potential loss, giving me slightly less risk on the trade because I've already banked the dividend. But I want to get a close through that 166 level. I'll trail my stop to below that swing low there. So basically at this point in time, just managing this trade, managing the risk until we close that gap and we're through the that dividend move. And once we get it close through that 185 level, once I get it close through that 185 level, I'll probably just add it to the position and trail my stop behind me accordingly. But so far, acting quite good. We did touch on Glencore, Imperial. Imperial looking fairly decent. I entered on the breakthrough there, above that 48 Rand level. Came back to test the 50-day exponential moving average. Now I'm waiting for the breakthrough, that 51.50 level, and then I'll add to the position and trail my stop to that 46 Rand level. There's about around that 46.90 level. That's where I'll be looking to trail my stop toward once we get it close through that 51.50 level. Investec looking fairly decent, came bitterly close to stopping me out today, but held that support level quite well, closed above it. Yeah, Investec looking very, very good. That break there is what triggered me in on this trade. I was a couple of days late on this trade, but wasn't too late, fortunately. And so far, trade is in profits. So far, so good. And once we get a close through that 56 rand level again, I'll then have some room to breathe, because that price is far too close for my to my stop loss for my liking. Kumba looking fairly decent. Actually, what I was waiting for actually happened today. I was waiting for a close validation of that doji candle, which is a close higher, looking very, very good. So can do that now. Actually, trail my stop to. Nice thing about this think traded platform, you can just drag my stop as you would in the MT platform to that 66720 level. I'll adjust them properly after this after the webinar. But that 66730 is now my stop, and that's probably, yeah, I'm probably sitting in profit at the moment. Could be wrong, but probably. And then I'll add, if I'm on profit already, I'll add to the position and put my stop where the stop is at the minute. So Kumba looking very, 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 very nice. Momentum moving quite strongly. So I'm now waiting for that break. There is what got me in on momentum. Nice cup and handle or ascending triangle pattern there. On momentum. So I'm looking for a break. Once we get it close through that 21 rand level, as you can see, it's a level that dates back to early Feb. That's where, once you get through that level there, maybe close up through 21 rand, I'll add to the position and throw my stop behind me to around that 1940 level. Giants, if I jump back to the weekly chart, Giants cup and handle pattern on Mr. Price, looking fairly decent. If you want to place a target on it, that 296 level is a decent place for a target. See if we bring it ever slightly closer. So once we get it close through that 201 level, I'll add to the position. Want to close through that level, I'll add to my position and throw my stop to probably, let me just delete these two so that we can see the price properly. I'll trail my stop to around that level there, just below those lows there. So once you get a close through that 201 level, 201 level, I'll add to the position and throw my stop ever so slightly behind me. I'm liking this Mr. Price chart quite a bit. Similarly with MTN, nice bullish engulfing candle there, which is what I was waiting for. I'll add to the position and put my stop just below there, around that 91 rand level. But this will be dependent on if my risk on the trade is less than 1%. If it is, I'll add to the position. If it's not, I'll just throw my stop and leave it there. Perhaps I should be waiting for that close through that candle there. A new high close would be nice, but this bullish engulfing candle was quite giant. I cannot miss on that trade. I will, use 2 times. What's the 8R on this? So using 2 times 8R, I'll probably trade my stop to around that 91 rand level, but I'll have to determine that properly post the webinar, perhaps below that giant low there, I'll trail my stop to 91.20. Next is multi-choice. Multi-choice had a huge gap today through the 200-day exponential moving average. Came pretty close to stopping me today, but didn't. But I am expecting to be stopped out probably tomorrow on this trade on multi-choice. Nedbank, another one that I was kept out of due to 60-week and 30-week exponential moving average. But once we got a close through, we got a breakout there, and then I took the trade, came back. In fact, we did touch on this, but 125, 152, 60, I'll jump back into this trade. So Hammond, finally, sorry, took some time, but I'm on Pepco. Yeah, I'm liking Pepco quite a bit. I first entered on that break there. In fact, that was my line there. So on the breakout there, I took the trade. My initial stop loss was below those lows there. And again, when we had that close through there, I'll trail my stop. Again, now we had a breakout through that level there, in which case I also added to the position, looking very, very good. If I jump back to the weekly charts, I'm looking for the close through that 1880 level. Nice, when you're looking at this weekly chart, broke through the 50-week exponential moving average, made higher. Let's do that. Made higher lows, looking very, very good. Nice cup and handle formation initially on the trade. On the weekly chart, broke out, making higher lows. Now broke through the 200-week exponential moving average, which is quite significant. So I want to get a close through that 1880 level on Pepco. I'll add to the position, control the stop behind me. So yeah, I'm liking Pepco quite a bit. Another one I've been on for some time now is Royal Bafokeng Platinum. So last week Platinum miners were having quite a tough time, but Royal Bafokeng was holding up quite nicely. Seemed to be the strongest of the bunch, and if a stock demonstrates signs of being strong, you'd like to hold that stock. It did try to break through that the falling wedge, but failed, and that failure is more important to me than the falling wedge itself. So I tightened my stop ever so slightly to that $100 level, so that if I do get stopped, at least I can lock in some profits on Royal Bafokeng. I think I'm sitting at about 6% profit on Royal Bafokeng as it stands right now. And today it closed below the 50-day exponential moving average, but not so strongly. So let's see how this falling wedge pans out. And it looks like it has morphed into more of a bullish flag more than anything. But let's wait and see. And as a result, I was going to add on the breakthrough the falling wedge, but now I'm only going to wait for that 180 level to break through, and then I'll add to the position on Royal Bafokeng. Rand Merchant looking quite lacquer. Broke through that symmetrical triangle pattern there, looking quite good. So I'm waiting for a close through that 32 Rand level, and then I'll add to the position. And I'm going to trail my stop, just after this. Let me just quickly do it now, to just below that golden cross there. It looked like it was going to cross lower, but came back and gave us a golden cross. So, trailed my stop to that 32 rand level. Once you get through that 32, 36 level, I'll add to the position and put my stop just below there on the stock. Sasol, also giant cup and handle pattern. Those got a fair bit of cup and handle patterns that we had on the market. Nice run bottom on Sasol on the weekly chart there. A nice golden cross, making higher lows. So now I'm waiting for a breakthrough that 250 level, in which case I'll add to the position and trail my stop probably to at the 232, but just to give it a little bit more room. Nice bullish engulfing candle, engulfing that the doji candle there, which is quite significant. Once we get through 250, I'll add to the position and trail my stop well behind me. Just get rid of all those tools. Sorry, prices. I actually recommend this, guys. If you from time to time, you should just delete all the tools that you have and just be left with price and your indicators. So yeah, once you get through that 250 level, I'll add to the position and trail my stop behind me accordingly. ShopRite, nice doji candle there on ShopRite. Broke through that 50-day exponential moving average and looked like it found some resistance at that 148 level. But that bullish candle, that bullish price action there looks fairly decent. Looking for a breakthrough, that 148 level. Don't know, maybe we'll have a catalyst in a form of a trading update or something, but I want to get it close through that 152 level. I'll add to the position and pull my stop to that 145 level on ShopRite. Transaction capital, currently accounting for quite a bit of my profits on, it's just, carrying my portfolio on its back. First entered transaction back here. I've been pyramiding into the position since. Looking for a break back into this higher box. If you get it close through that 34.40 level, I'll pull my stop to around that 33 rand level and some change. But so far so good. No qualms on the trade, but I'm looking for the breakthrough. If I can just delete that box. A breakthrough that 140 level, so that I can add again to this position. Transaction capital looking very good. And I saw some sense announcement today that they're looking to buy the company that owns We Buy Cars. So yeah, we transaction capital making some good moves there. Truwards, looking fairly decent. But I'm waiting for the close through that that 51 rand level. Came back to test the 50-day exponential moving average and held it as support. Has been trending higher since, but we'll see if you get it close through 51.30 level. I'll add to my position and trail my stop accordingly to around 48 rand. 60 or there's about. So that's it from my end. If you guys have questions or charts you want me to look at, we can quickly have we can have a quick gander at them. But if we don't have questions, we can call it a night. Ladies and gents, I'm not seeing questions coming in. Take Growth Point. Actually, Growth Point is on my watch list. Yeah, guys, let me just a quick shameless plug. I write a weekly copy. I call it Stocks in Play, looking at the stocks that I'm looking to trade over the next week or over the next couple of weeks, and Growth Point was definitely one of them. And if you want to subscribe to that, just to go to villagetrader.co.za, and you will, there's a subscription, you can, there's a subscription form there, and just sign up there, pop you an email every Monday morning or every Sunday afternoon. So nice, giant cup and handle pattern on growth point with a golden cross on with a nice golden cross, and growth point looks like it's still it's the strongest of the property bunch, starting to recover from the COVID crash, but we'll see over time how the stock pans out. But I'm liking it quite a bit. Once you get it close through that 1490 level, I'll take the trade, and I'm expecting some reaction at that 15 rand 77 level to come back to test that 1450 level, and then in which case, close through that 15 rand 70 level, add to the position. And if you're trading on targets, 19 rand is not a bad target at all. But I don't trade on targets. I only exit trades on stop loss. I just jog along the trend with a stop loss behind me. Of course, there's risks to that, but so indices. I'm not sure which indices. First, start with the top 40. So, the top 40 is having a tough time with that 63 rand, that 63,000 points. That 63,000 points level. Every time it gets there, it looks like it has found some proper resistance there. But I believe once you get through that 63 rand level, we should be fine. Once you get that 60, above that 63,000 level, probably if we can close to get the highest close above that 63,300 level, we'll be good on the top 40. UK 100. UK 100. And let's look at also the S&P, US 500. US 500 or S&P, SP, XPX. Yeah, S&P 500. And German 30 as well. Let's add German 30. If you think of any other index, do let me know. I'll quickly have a quick gander at it. So UK 1000, looking fairly decent, testing that 50-day exponential moving average, and that if you can close back above the 7,000 level, that provides a good entry with probably a stop loss below that swing low there. If you can get a nice close that's through that 7,000 level without violating the stop loss entry level there, that should provide us with a good entry on UK 1000. Ooh, that doesn't look good. But looks like that 50-day exponential moving average is holding up on the S&P 500. That doesn't look good at all. But if we take this level as support of support, and it was broken today, that's if it closes like, assuming it closes like this. It closed back through that 4130 level, provides a good entry with a stop loss just below that 50-day exponential moving average. But even though there was a sharp pullback over the past 3 days, I don't think for a second this is the start of a bear market on the S&P 500. I think it's just a normal pullback reaction there. And I think all the global indices are just having a breather. They've been running quite a bit, and just like humans, indices and stocks do from time to time take a little break just to catch a breather before they run again. But I don't think for a second that this is the end of this bull market, even though this looks like a head and shoulders pattern which already broke, and I think we should target and served its purpose already. But once you get it close through again, that 15,000 level would provide with a good entry with a stop maybe somewhere there. Not too bad, not too bad. I don't necessarily trade indices, but they are looking fairly decent. Graham is asking if I do look at volume spikes. I do from time to time, but I don't trade based on volume. But I do look at from time to so more volume just gives me a bit more confidence on the trade, but doesn't necessarily mean that I will take a trade or not. I don't use it as a filter; I just use it as a nice to know on the trade. So Darren, I'm not 100% sure if we have Massmart on the platform. Oh, there it is. But I'm not sure if it's tradable. It's not tradable. They only have it as an equity. So yeah, no, unfortunately, I can't chart Massmart at the moment. But for free, just pop me a DM on Twitter or an email Njabulo at Village Trader. I'll look at it on a different charting platform. Netcare. And Rich, I'm not sure if you mean copper as in copper the commodity. If you do, I'm not sure if we have it. Oh, it looks like we do. Okay, that's interesting. Netcare. Looking at Netcare. Netcare looking good. Nice golden cross on Netcare. Actually, nice symmetrical triangle pattern on Netcare with a stop around that 14 Rand level or some change. So if you get a breakthrough that symmetrical triangle pattern, plus we have a golden cross, that's a decent win behind our back. A breakthrough that symmetrical triangle pattern, I will take this trade and put my stop just below the lows of the symmetrical triangle pattern there. Nice spot there, Enrich. So let's look at copper. Wow, copper looking very good. I've never traded copper or charted it. Looking fairly, it's looking quite decent. Yeah, looking very good. Looks like the right side on this copper chart is the long side. Apologies, guys. I wasn't monitoring the chart properly, but gold, yeah, gold is looking gold. What's the is it AUX? Was UAX? What's the symbol for gold? There you go. Go back there. I actually do like this gold chart. Yeah, I do like this gold chart, but I'm waiting for that golden cross to come again on gold. But that break there gives me a little bit of confidence, and hopefully the gold miners will play ball as well. But yeah, this looks like this double bottom on gold is playing out because it broke through the double bottom there on gold. It also broke through what was support and it looked like it's staying above it. Let's see if we can take out that 1842 level, which looks like it's still struggling with it. But if we get a close above it, that's good. And let's see if we can get close through 1870 level. But so far, gold is trending. Looks like it's starting to trend nicely. But then if I'm looking at this trend line there from those highs, yeah, let's see if it breaks this trend line there, because the higher lows. Let's see if we break that level there. It looks like we're still making lower highs on gold. So it's a toss. It's a toss, really. It's a toss, really. And if this doesn't hold, we have to wait and see if this double bottom holds again. if gold fails to break through this downtrend line there and start to make a high by violating this level there and make a high, if we break through that 1680 level, there's going to be more pain on gold, probably to around 1530 or 1450 or there's about. And with that being said, I'm starting to be quite bearish on gold at the minute. And this golden cross, this negative golden cross kind of supports that. But let's see how it holds through the trend line there. Ladies and gents, I'm not seeing any more questions or chat requests. Cool. There. Quick reminder, Think Markets has a host a weekly webinar. You can join them, link there. Otherwise, thank you guys. Again, sorry for last week, but we're back again next Wednesday. Thank you guys for joining me. See you next time. Catch you next week again. If you have any other questions sometime during the week, feel free to pop me an email on Njabulo at villagetrader.co.za or simon@justonelab.co.za, or you can follow both of us on Twitter at SimonPB and at villagetraderza. And Marlo, thank you very, very much for birthday wishes. And you're very welcome with the chart ideas, and we'll learn together. Ladies and gents, thank you very much. Have a great evening. Stay safe, wash your hands. Check you again next week. Cheers.